Welcome back. In the last session, we have started with the concept of financial reporting. I believe you have got a slight idea regarding the concept of financial reporting. Under that area, we have mentioned that one of the main purposes of financial reporting is to provide information to its users, or communication of financial information to the users is known as financial reporting. And in order to achieve that financial reporting, every organization will present their information and communicate it to the users. And one of the objectives of the financial reporting means provide information to the users so that they can take decisions. So decisions means whether to invest in a company or not. So how a user is going to take decision whether to invest in a company or not, because there might be different companies and informations may be provided by different companies, and whether to invest in a particular company. For example, there will be two companies, and if I want to invest in any one of the company, how I am going to decide whether to invest in any one of the company? So as per the financial reporting concept, I will get informations about the financial, whatever it is relating to the two concern will be obtained. So I have to go through the financial reportings provided by both the concern. So whether to invest in which concern, that depends upon the financial information provided by the concerned. And in order to take decisions, we need to compare. That is the most important aspect regarding the decision taken by an investor. An investor will invest in a concern after studying the information obtained from the financial statements of that concern. Not only that, there will be different number of concerns around us, and we will compare the information of one concern with the another. So in order to compare two informations, what we need? In order to compare two information, we need informations presented in a similar format. The information provided by one concern, if they are following a certain format, we can compare that information with the other concern if and only that same concern or the other concern also present the information in the similar pattern. Only then we can compare. Only after comparison only we can take the decision. If there is only one concern, there is no need for comparison. But it is not possible, because in the present business world there are more than 1,000 types of company working around us. So from investors' point of view, in order to take decision regarding whether to invest in which business, that mainly depend upon financial reporting. Financial reporting means information obtained from the financial statements of a concern. Not only that, if there are more than one option before an investor is there or present, the investor has to compare those information. So for comparison, one of the main requirement is the information has to be presented in a similar format. In simple sense, we can say there should be a uniformity. We used to compare the performance of students, or we used to compare the performance of mobile phones. How we are going to take decision regarding which mobile phone has to be chosen? There are certain parameters to measure the performance of a phone, and we will have that same parameters to compare two different phones. So from that we can easily identify which one is good. So why you have taken that decision regarding to select which mobile phone? That depends upon a certain pattern on comparison. That is, there is a uniformity in comparison. There is a uniform pattern should be there, because one phone provide a certain type of facilities and another phone providing entirely different types of facilities. Then how we can compare? So comparison occurs when the informations are provided in a similar pattern or uniform pattern. So let us come back to our topic. So in a financial reporting, the investors had to take the decision, and in order to take decision they should require information that is presented in a uniform pattern. So how that can be implemented, how this uniformity can be implemented, and one of the main aspect of bringing uniformity in the financial reporting is following of proper accounting standards. I hope you know what is meant by accounting standards. So through accounting standards we can bring uniformity in the financial reporting aspects. So let us learn in detail what is meant by accounting standards. Accounting standards. We all know accounting is considered to be the language of the business, and there is a certain universally accepted definition is there. We all know what is meant by that definition. Each language has certain set of rules. Similarly, accounting has certain rules to be observed by the accountant so that it is understood by all in the same sense. These set of rules become accounting standards when a professional body codifies and insists them while recording and reporting facts about the business. So accounting standards are certain set of rules and guidelines based on the principles and methods of accounting to be followed to have uniformity in approach and presentation of financial activities. And we all know every concern prepare financial statements such as balance sheet, profit and loss account, cash flow statements, fund flow statements, statement in changes of equity. They just said three activities, that is fund flow statement, cash flow statement and statement of changes in equity. We will study in detail in the coming sessions and in your coming semesters. Anyway, financial statements mainly include trading profit and loss account, balance sheet. There are other statements we will discuss in detail in the future classes. Anyway, why these statements are prepared means in order to know the position as well as performance. Not only that, it needs to be communicated. So in order to make these statements meaningful and useful, only if they are comparable with those of different years of the same firm or those with the other firm. As I have mentioned earlier, only through comparison we can take decision whether to invest in a certain company or not. So in order to achieve the objective of comparability of financial statement, there should be a standardized accounting policies and practices. Because accounting standards is a set of rules and regulations that has to be followed irrespective of the countries. Hence, accounting standards are formulated to maintain uniformity in accounting principles to be observed in the preparation of financial statements throughout the world to make them sophisticated, reliable and uniform. So that is the purpose of accounting standards. So what is meant by accounting standards? We have mentioned that. Anyway, let us discuss the term. An accounting standard is a selected set of accounting policies or broad guidelines regarding the principles and methods to be chosen out of several alternatives. In simple sense, it means a certain uniform set of rules that is known as accounting standards. Standards conform to applicable laws, customs, usage and business environment that is existing all around the world. These are written documents issued by expert accounting bodies such as ICAI, and there are not only ICAI or bodies, there will be other government and other regulatory bodies covering the aspects of recognition, measurement, treatment, presentation and disclosure of accounting transactions in the financial statements. So that is mainly the concept of accounting standards. In simple terms, sense, they are a certain set of rules that has to be followed while preparing financial statements irrespective of any country. So, an accounting standard is a principle that guides and standardizes accounting practices. The generally accepted accounting practices, otherwise known as GAAP, is a group of accounting standards widely accepted as appropriate to the field of accounting. We have learned about that. It is a guideline for the financial accounting, such as how a firm prepares an accounting statement, how it is presented to the users, how it is presents its business income, expenses, assets and liabilities, how the position can be identified, how the performance can be identified. For all these there are certain set of rules that is implemented in order to maintain uniformity. That is known as accounting standards. Next is Accounting Standard Board. The Accounting Standard Board, otherwise known as ASB, was constituted by the Institute of Chartered Accountants of India, otherwise known as ICAI. Kindly familiarize all these terms. ASB means Accounting Standards Boards, ICAI means Institute of Chartered Accountants of India. So familiarize these abbreviations. On 21st April 1977, to harmonize the diverse accounting policies and practices followed in the country. The board constitutes members nominated by ICAI for the purpose of making suggestions for setting accounting standards. The Accounting Standards Board, otherwise known as ASB, has to formulate accounting standards so that such standards may be mandated by the Council of ICAI. While formulating accounting standards in India, ASB has to take into consideration the various applicable laws and various customs that is followed all over the country, the usages and business environment in the country. After considering all these activities only, the accounting standard can be implemented. So the main function of ASB is to formulate accounting standards. We have mentioned that. After taking into consideration many aspects, and while formulating accounting standards, the ASB should give consideration to the international accounting standards issued by International Accounting Standards Committee, otherwise known as IASC. Remember that. Why they are to consider the International Standard Committee? Because one of the main purpose of financial reporting is communicating to the external users, that is, such information should have uniformity. In order to bring uniformity, there should be standards. So such a standard should be prepared according to the conditions of our country as well as the condition prevailing in the international situations. So while setting the standards in our country, the ASB should consider the standards or guidelines issued by the international accounting standards also. Then only the uniformity can be maintained, because standards set by ASB is one type and the standards or the guidelines issued by the international accounting standards, if that is different from our standards, then it will be difficult to maintain uniformity. If there is no uniformity, we cannot compare it. If there is no comparison, then there is no use of these informations. So in order to maintain all these, there should be a proper communication and uniformity in maintaining and presenting standards. So that is known as Accounting Standards Board. Next one, that is mentioned here, ASB has to formulate accounting standards so that such standards may be mandated by the Council of ICAI. While formulating accounting standards in India, ASB has to consider the applicable laws, customs, usages and business environment in the country. We have mentioned that. Next one. So what is the objectives or importance, or we can say what is the need of accounting standards, or in other sense we can say what is the purpose. So if you come across a question, what are the objectives or what are the importance or what are the needs or what are the purpose or what are the advantages of accounting standards, whenever you come across such question, answer the following points. First one, Elimination of variations in accounting treatment. We have mentioned about that. The accounting standards reduce to a reasonable extent or eliminate altogether any confusing variations. Remember that. Any confusing variations in accounting treatments in the preparation of financial statements. That is the main purpose of accounting standards. Remove variation because we need uniformity. Only through uniformity we can compare informations. Reduce confusion in accounting practitioners. Practitioners means who accountants, we can simply say accountants or experts in that field. On giving clear guidelines as to treatment of certain items which can be treated differently, how it can be treated. For example, for computing the depreciation of fixed asset, there are different methods and each method has its relevance. So if there is a certain set of rules regarding this method has to be followed under these situations, and if that rule is applicable in all over the world, then there is no confusion. Everyone can follow a system of uniformity. So the accounting practitioners can follow one method which is most suitable for the situation as per the accounting standards. That is the main purpose of accounting standards. Avoid confusion. When there is different methods to deal a similar problem, then there will be confusion regarding which method has to be selected. So if there is a proper standard regarding this certain method has to be followed for solving certain problems, then there will be no confusion. Next one, helps in disclosure of information. There are certain areas where important information is not required to be disclosed by law. But accounting standards may call for disclosure of such information beyond than required by law. That is one of the most important aspects of accounting standards. Some information is not to be required by the law to publish to the external users, but accounting standards ensure that whatever information relating to the company, it should be made available to the public. And it doesn't mean that the company has to publish their trade secrets or their very vital information. There is no rule regarding that. Whatever information relating to the company, it must be shared to the public, except for their trade secrets and their vital informations. All other information has to be provided to the public. Accounting standards implement that. Next is helps in comparison of financial statements. That is one of the most important requirement of maintaining this uniformity, because there are different concerns, and if I plan to invest my hard earned money in these concerns, I don't have such funds to invest in all the concerns. I will have short funds, or I will have limited resources to invest, so I have to decide according to the information provided by all these concerns. So accounting standards helps in financial statement comparison, because accounting standard facilitates comparison of financial statement of different companies situated at different places. How? By uniforming the presentation of information of various concerns. Only through uniformity we can compare. Next one, helps to increase the confidence of investors. With the preparation of financial statements as per the accounting standards, window dressing of the statements can be reduced to a great extent, which in turn will improve the confidence of the investors, because accounting standards implement or initiate true and fair presentation of financial statements. When the statements are providing true information, the investor is able to get information regarding what is the position of the concern, what is the situation of the concern. That will provide the confidence among investors to invest their hard-earned money. And accounting standards will not encourage window dressing or any type of misrepresentation or malpractices. So it will protect the confidence level of the investors, because investors are getting true information about the concerns. Helps to reduce fluctuations in the value of the shares. The manipulation in trading results to cheat investors can be reduced to a great extent on following accounting standards. while preparing the financial statements. This results in steady share market where there is less fluctuations in the value of the shares. One of the main issues that investors face in a share market field is fluctuations in the value of the shares, and the companies, in order to earn more profit, may indulge in some unethical practices to bring all unfair fluctuations in the value of the shares. But accounting standards prevent such unfair fluctuations in the value of shares and maintain a uniformity. So these are some of the main objectives or the benefits of implementing accounting standards. There are many more objectives or benefits with regard to accounting standards. So before we go further into that, let us go to next one. What are the procedures that has to be followed in formulating accounting standards? No accounting standard is formulated quickly or overnight. For preparation of a state standard, the authority has to study in detail the requirement of the standard, where it has to be implemented, and how these has to be implemented, and it has to be studied in detail by different parties. After that, the finalization of the standard, and finally it is implemented. There are certain steps or stages. We can briefly discuss what is the procedure for formulating accounting standards. So there is a certain pattern for which a standard is implemented in a field. So first of all, the accounting standard board determines the broad areas in which accounting standard need to be formulated, whether the standard is required in the field of industry, whether in the field of agriculture, whether in the field of any of the sectors that are operating in the country. So first of all, a accounting standards board determines or identify in which area a standard is required. For example, in IAS 41 relating to the agriculture, there are different standards. So each standard is concentrated in different areas. So first one, to identify where a standard is needed. Once it is identified, the accounting standard board take the assistance of various study groups to formulate standards. Study group means certain group of persons who is working in this field regarding studying or conducting research in the field of standards. So there are certain study groups will be there. So accounting standards board will acquire assistance from such study boards in order to formulate the standards. So how it is how the board is getting assistance means the draft of the standard will be prepared by the study group and it is considered by the accounting standard board, and the same draft is sent to various accounting bodies related to the Indian business or Indian industries or Indian taxes, etc., and the representatives of these bodies are also invited to a meeting convened by accounting standard board for the discussion about the draft standard. Draft standard means something that is prepared initially before it is finally implemented or issued. That is known as draft. So first stage means accounting standard will identify where standard is to be implemented. After that, the accounting standards board will get assistance from different study group who will prepare a draft document regarding the standard, and it will be discussed with the representative bodies of the country. Representative bodies like Institute of Chartered Accountants of India, Indian Accounting Standards Board, like that, and they will even conduct a meeting to discuss regarding the standard that is going to be implemented. It is not implemented, it is going to be implemented. So after considering their views means the views of the various bodies as well as the study groups, the draft of the accounting standard is issued as a exposure draft for soliciting the comments from chartered accountants and the public at large. Exposure draft means just like posting your photo in Facebook or publishing your profile picture in WhatsApp. That is known as exposure draft. That is publishing the draft standard to the public, so that where the chartered accountants working in our country or outside the country, and even the public can also comment against those standards, whether the standard is good or whether the standard require any alterations or any adjustment or some changes. For that purpose, it is published to the public. The draft is also published in the journals of the institute also. Institute of Chartered Accounts of India has a journal that is published by the institute, and the draft of that standard will be published in the journal also. The main purpose means after providing the draft to the all the public, there are certain suggestions will be there. Means if the standard has to be corrected in such side, or if the standard requires more alterations, and other suggestions like that from the public. In order to invite that, this draft is offered to the public. And after issuing this draft as an exposure draft, the comments about the exposure draft are then considered by the accounting standard board, and a final draft is prepared and submitted to the council of the institute. In this stage there will be many suggestions, and in this stage those suggestions may be considered. After considering the suggestions, it may be submitted to the council of the institute. Institute is the one that finalizes the standards, and finally the council of institute consider the final draft, and if necessary some changes or modification may be done in consultation with the accounting standards board. The accounting standard on the relevant subject is then issued under the authority of the council. That is how an accounting standard is implemented in a particular area. It is not an easy task. It is a time consuming and energy spent by many persons working in this field. So that is how an accounting standard is implemented in a country. So we have discussed about the concept of accounting standards, and the concern or the group that issue accounting standards is known as Accounting Standards Boards of India, otherwise known as ASB, and we have discussed about the procedure also. So next let us discuss what are the limitations of accounting standards. Right until now we have discussed about the benefits or merits or the positive aspects of an accounting standards. Remember, in this world there is no such thing as a perfect beneficial item. Everything has its cons. So let us discuss the limitations. Some of the important limitations are: first one, difficulty in choosing different alternative accounting treatments. There may be alternative solutions to certain accounting problems. Therefore, the choice between the different alternative accounting treatments may be difficult. For example, finding out the value of goodwill. I believe you have learned about the concept. There are different methods to learn how to identify the goodwill, and there is no rule regarding this method, or certain method has to be followed under this situation with regard to goodwill. So it is quite difficult for the practitioners to select which method to follow to identify goodwill. In theoretical sense, there will be certain pattern to be followed. If this method has to be followed under these and these situations, but when it comes to a practical point of view, the practitioners or the accountants will find it difficult to choose which one has to be selected to identify certain items. So that is one issue with regard to standards. Difficulty in choosing different accounting treatments. Next one, emphasis on rigidity rather than flexibility. There may be a trend towards rigidity and away from flexibility in applying accounting standards. That is not only relating to accounting standard, it will be related to anything that follow a set of rules and regulations. One of the main issue with regard to rules and regulations means it will be more rigid. It will not be flexible. In accounting standards, that issue is there because accounting standards set aside various set of rules to be followed while preparing or practicing accounting. Sometimes these rules may be rigid, it is not flexible. And whenever something is very rigid or too much rigid, it is very difficult. Next one, it cannot override statute. Statute means law or rule like that. Accounting standards cannot override the statute. The standards are required to be framed within the purview of the prevailing statutes. Statute means the law that is prevailing in the country. So every standard has to be followed and implemented as per the rules and regulations of the country. It cannot override the rules and regulations of the country. Next one, differences in accounting standards are bound to be there because of differences in the legal system and tradition from one country to another. We have mentioned that accounting standards help in maintaining uniformity irrespective of the country, but even after that also there are some issues because the legal procedures followed in one country is different from another country. Different practices followed in different countries. So maintaining a uniformity with regard to accounting standard is quite difficult with regard to the legal systems and traditions prevailing in different countries. And finally, the preparation and following of accounting standards is a costly and expensive activity because they create additional unnecessary work which may affect fees, particularly in audit of small companies, because accounting standards means there are certain set of rules and regulations that has to be followed. Business may be conducted by anyone. There are many successful businessmen who haven't gone to any schools and colleges. So how they are going to manage these accounting standards and following your rules and regulations? So it will be very difficult for a small firms because they have to hire specialized personnel and who is having knowledge regarding this area. So the expense will be very high, their fees and remuneration will be very high. So practicing accounting standard from the small business point of view is a very costly and expensive activity. So these are some of the limitations with regard to accounting standards. We will discuss further about other theoretical aspects with regard to convergence of IFRS in the coming sessions. Until then, go through it. If you have any queries, please do let me know.